Today we'll be discussing FBARs, Foreign Bank Account Reports, also known as the FinCEN Form 114, Financial Crimes Enforcement Network, Form 114. Welcome to Tax Facts, where we spend a few minutes discussing the most frequently asked questions I receive in my practice as a tax controversy attorney. I'm your host, attorney and CPA Eli Knopf. Thanks for joining. FBARs are required to be filed if a U.S. person has a financial interest in a financial account or signature or other authority over a financial account in a foreign country, and the aggregate amounts in the accounts valued in dollars exceeds $10,000 at any time during the calendar year. Now that's a lot to unpack, and we could spend a couple hours going through some of the defined terms in that definition. But big picture, if you have foreign accounts and the aggregate amounts exceed over $10,000, you have to file an FBAR. The due date for the FBAR is April 15th, and note that it's filed separately from your tax return, and it's filed on the BSA Bank Secrecy Act website. Note that some softwares have the ability to file it with your return electronically, but if you're filing it separately, you must file it through the BSA website. There's currently an automatic extension in place until October 15th. So if you're watching this video before October 15th and you haven't filed yet, you may still have time. Note that the automatic extension has been around for some time, but that can change at any given moment. Some important tips. The account location controls, not the nationality of the financial institution. So although the name of the bank might seem like a familiar US bank to you, if the account was opened in a foreign branch, it may still be considered a foreign bank account. Foreign accounts can include pensions, retirement accounts, brokerage accounts, and insurance policies, amongst other investments. The aggregate value piece of the definition is computed by selecting the balance throughout the year for each account that fairly approximates the highest balance. When there are multiple accounts, keep in mind that each account high balance may be on a different date. But for purposes of the $10,000 aggregate calculation triggering the form filing requirement, you add the highest balances together for all accounts, even if they're on different dates. So if account number 1 has a high balance of $4,000 in February, but is zero the rest of the year, and account number 2 has $7,000 high balance in October, when account number 1 has a zero balance, although on the same date at any given point in time, the aggregate does not exceed $10,000, the highest aggregate balances in this example exceed $10,000. In our example, the highest aggregate balance is $11,000. So keep that in mind. I would be remiss if I did not mention the Schedule B on the Form 1040. Certain filers with interest and dividends may trigger Schedule B filing requirements, and we're talking about domestic interest and dividends, not necessarily foreign. It's important to note that at the bottom of the Schedule B, there are questions regarding whether or not you have an interest in a foreign bank account and whether or not you have a filing requirement. Make note of these questions and ensure they're properly answered. Improper answers may impact your willfulness determination for purposes of penalties. And finally, not to end on a somber note, the late filing of FBARs may be subject to either non-willful or willful penalties. By statute and subject to inflation, the non-willful penalties are $10,000 per violation, which the IRS currently interprets as a per account per year penalty. Willful violations are subject to the greater of $100,000 or 50% per violation, which is a lot more significant than your non-willful penalty. And as briefly mentioned earlier, willfulness determinations can be made from a seemingly benign act of checking the box no on Schedule B with regard to foreign account reporting. The penalties here are significant. And if you're out of compliance, I would recommend consulting with a qualified tax attorney to determine the best options to come into compliance to mitigate the possible penalties. I invite you all to subscribe to our YouTube channel if you're interested in hearing more tax facts and other relevant content. You can also visit our website at askfrost.com or give us a call if you have any questions. That's all for today. Thanks for joining.